All right, I'm excited to introduce our next guest on the program. It is Jim Tousignant, founder and CEO of FinTech Studios. Hey, Jim, thanks for being here.
Thank you, Craig. Real pleasure to be here.
I'm excited to have you. And man, we go way back. This has been a while. We were just catching up before we started on this, and it's been decades, I think, since we worked together back in the day. Where are you calling in from now?
I'm calling you from lovely New Fairfield, Connecticut, but our offices are in Manhattan.
Fantastic. Of course, I'm in New Jersey. As everyone knows, we're suffering from this 90 plus degree muggy heat wave, but we're managing to keep cool, and we have a lot of fintech to talk about, wealth tech to talk about today. So Jim, can you give everyone listening the 30-second elevator pitch for FinTech Studios?
Sure, happy to do that. The way to think about FinTech Studios is we're the leading generative AI platform in the wealth tech space and in the capital market space for business intelligence and regulatory intelligence.
You didn't even use the whole 30 seconds. Impressive.
Short and sweet.
As I mentioned, we go way back. I mean, we worked together at ADP Brokerage Information Services back in the day that eventually was split off into, they sold the front office business to Bridge, which then was sold to Reuters, and the back office was spun out in 2007 into Broadridge Financial. But that's been a while. I mean, I left there in 1998. How long were you there?
I was there from that would be 1988 to we then spun out Multex Systems in
Right.
1994, of which ADP was actually an early investor, and that's when
Mhm.
we kicked off Multex, the online brokerage research company that we started and built out. Yeah, so it's been a while, Craig, definitely.
You and I started at ADP at the same time. I also started in 1988. Right. And I worked on the Multex platform when we first bought it. For people who don't know, that the market data used to be available only through Quotron green screens. I always use the example of Trading Places with Eddie Murphy and Dan Aykroyd. When he looks up the frozen concentrated orange juice price, that's a Quotron, that green screen. And ADP, we were pulling them out and putting in IBM PS2s with Multex software, which we acquired because they had the first Windows-based Microsoft Windows 1.0 version that did market data. Yeah, that was a long time.
To that, Craig, actually, it's a great story. It brings back memories. But yeah, ADP had won some major deals, I think, with Shearson Lehman Brothers and Merrill Lynch to
Yep.
displace Quotron, and that would make them the number one provider of real-time market data in North America for brokers and financial advisors. But the product that they were rolling out in the PS2s was written around DOS Mondrian, which was a version of Microsoft that was character-based. And as you remember, clients hated it, and it was a pain to really get it where we needed to integrate.
It was written in assembly language. I had to do I was in integration when they did the Mondrian version. I compiled that. It was assembly language, right?
So it was funny because I was with a company at the time called Multex Software, a predecessor to Multex Systems,
Yeah.
with Isaac Kareev and a bunch of really smart engineers. And we actually had built out the first Windows-based quote product using Windows 1.0. We did a promotion with Microsoft and stuck our little brochure in the back of the envelope. And ultimately, ADP acquired the company. And not only did we build a true Windows version of FS Partner, we also built an OS2 and Unix version of FS Partner. And that took us about 3 years at ADP. And at the end of it, we got the itch to start a new business, which also was Multex, the brokerage research, because I was selling those Windows OS2 and Unix products into ADP's clients. And actually, they were selling well. But ultimately, a lot of the clients like Merrill Lynch said, why can't you deliver our full text research over FS Partner? And the more clients I talked to, the more I realized this was a universal problem, and off became Multex.
Yeah, it's a great story. Yeah, it was so long ago, but we were doing cutting edge stuff back then, right? That's just
we sure were.
It's quite a change. All right, so let's roll things forward now that we've gone down memory lane. Let's get back to FinTech Studios. We want to talk about a couple of use cases. So this is a market intelligence platform. It's pretty impressive. I just got a quick demo. Thank you for showing me that. Can you talk about a couple of use cases? Let's kind of walk the audience through ways that your current user base are taking advantage of your platform. So let's talk about Citi Wealth Management. What are they doing, and what parts of the platform are they using, and how are they using it?
Sure, Craig, happy to go through that. So Citi Wealth Management, like any wealth management firm, large, medium, or small, has now a really growing challenge of how do they drive customers and engage with customers in a fast-moving digital world. And so we deliver to them using our AI, machine learning, NLP platform, and the millions of sources that we ingest and tag and index. We've created a very powerful intelligent search experience, which is available to clients, either a full stack application or a set of dashboards or widgets, of which Citi and many others use, but also APIs. So effectively, they're providing their wealth advisors and their wealth customers with better market intelligence about their portfolio, about what's happening in the market and why. And those insights are valuable because it creates engagement and high value between the advisors and their customers.
So that was very interesting. I mean, I remember doing this back in the early 2000s. It was so complicated and so slow. And what you showed me when you see what can be done now is incredible. When you're showing news sources in real time, spiking by the hour during the day about a particular stock, and then you can drill down into that. So that's allowing advisors to in real time say, hey, is like you mentioned, for example, Charles Schwab had a drop of 9% yesterday. They missed their brokerage account opening numbers. And then as an advisor, I could take that, see that spike, see the news story, and then that gets fed into generative AI tools you have that create a summary that I can then push out in a newsletter to my clients.
That's exactly right. I mean, it totally changes. I would say it revolutionizes the way a wealth manager, financial advisor interacts. He can spend more time with clients. He can set up unique channels for each client's holdings or interest. He can be alerted when anything that affects them, he can deliver it to them. He can even deliver them a daily update from him that's personalized, which means now instead of servicing 200 wealth clients, he could service 500, even better. And now when they think about where they put more of their assets or who they do more business with, they're going to think about the person who's sending them the most important, relevant things when it's important and giving them explanations as to why it affects their holdings or their interest. And that definitely changes the dynamics in terms of who those wealth clients do business with and how they want and expect to be interacted with.
Yeah, one thing we were talking about, and I mean, we're both techies. I've got a degree in computer science, but a lot of people don't understand how generative AI works. And on the one hand, everyone sees when I can plug in something into ChatGPT or Hugging Face or Claude, write me an article on about this, and it generates an article, or write me to create titles based on this article. But you're using it even earlier in the process. You're using some generative AI for enriching data. Can you explain how that works?
Sure, Craig. Actually, the business was founded almost 10 years ago on the premise that we were going to focus on AI, machine learning, NLP. At the time, there was no concept 10 years ago of generative AI, although it was always in the research discussions, because AI has been in the technology space in the universities and academics for 40 or 50 years.
Mhm.
So we've been using AI, machine learning, NLP, including things like transformer models for years. Transformer model is a foundation around things like ChatGPT, which is based on a transformer model.
Mhm.
So what's changed is a few things. A, the volume and velocity of data has just exponentially exploded, good and bad. It's created enormous noise for people. It's hard for them to find anything. Google doesn't really work because it gives you links to sites that you then have to go and traverse and figure out what's going on. But really, the thing with large language models, particularly when ChatGPT launched a couple of years ago, is in my mind, it was revolutionary, Craig. I mean, I've
Mhm.
seen a lot of technologies in our collective timeframes in this industry, and this is by far the most amazing. But it has limits, right?
Mhm.
People are fooled to think that these large language models are databases, and they're not. They are statistical models of word combinations. It's probability of what's the next word after the or
Mhm.
apple, right?
Mhm.
And it's great because it generates, particularly with the power of these models, particularly with the number of um, things that they're now tracking in terms of their size and complexity. but they will hallucinate because they don't have facts and data. So one of the strengths that we've had all along is that when we ingest and tag publicly available data or client data, and I mean documents, rich, complex, or simple documents of all forms. So using now generative AI is the magic, because now when you combine highly structured, orchestrated data, and you combine it with what's called prompts or prompt engineering, if you were to say, what's the latest news on my client's portfolio, and you know the constituents of that portfolio, and you feed it from your massive corpus of billions of structured documents, which is what we've built out, exactly the right information. And when you combine that with the prompt and what's called RAG, or retrieval augmented generation, that will give you correct answers, and it will give you links to the authors and the publishers for credibility and citation. And so that starts to become revolutionary, because now you can find anything, summarize it instantly, and communicate it in ways that you might want a bullet point summary, and this other client might want a 500-word long prose in German. And
Indeed.
so the tools now become amazing, and these models obviously are getting more and more powerful, almost at an exponential rate. It's amazing to watch.
Now, we've seen firms in our industry use RAG, retrieval augmented generation, because it sits like an overlay on top of the LLM, and it gives it focus, right? It has to reference what you've defined as authoritative data sources outside of the training data. That way, before it generates a response, it's gonna validate it. That's all happens in milliseconds, but it's validating. So that should, for what we've seen, firms that are using RAG have a lower probability of hallucinations than those that don't use it.
Yeah, it's that absolutely a huge impact to the models. The latest GPT-4o model that was released just maybe a month ago is massively more powerful and faster and cheaper, frankly, than even the previous model, which was phenomenal. But it does a lot less of that. It has a much bigger what's called context window. You can feed it a lot more facts, to your point, and that's where RAG really comes in. It's the best answer that we found. And while you sometimes will still get, depending on circumstances, something that is not quite correct, or others, the other key is what's called system prompts and user prompts, particularly in wealth management, wealth tech. I think you need guardrails. I think we support this idea of prompt libraries, where a Citi or a JP Morgan or a Deutsche Bank or a UBS or anybody in the space, Gen AI is here. Morgan Stanley is rolling it out now actively to all of their advisors, and soon I'm sure you'll see it to advisors' clients of different segments. And so you can't avoid it. You have to embrace it, but you want to do it with guardrails. So you make sure that the summaries always comply with disclosure requirements, and you make sure that if they ask for some, give me a investment idea that will generate 100% return guaranteed, that it will guardrail the response. And you do it through creating predefined, well-tested, highly articulate prompts where you spell out what you want, what you don't want, how it has to be formatted. And then by testing it thoroughly, you have a much lower probability that you're going to generate either hallucinations or anything that would potentially put the advisor or the firm at risk. And so I think this is getting better and better, but we're still in the early days, Craig.
I think a lot of people are surprised when we explain to them that the output of the generative AI tools, the level of benefit you get, or how well the output is highly dependent on the prompt. And the better and more accurate the prompt can have a huge impact on whether the output's even useful or not.
Exactly. And also, as you go across models, we support multiple large language models, not only within a firm like OpenAI, but also Amazon and Google and others, because we want to be model agnostic. And each model is a little different. So sometimes you have to fine tune your prompts even within the same model as it advances. So you're absolutely right. That's a key part of this, is not just how and where you interact with these large language models. And frankly, every application that we have all been using for years, whether it's Google or Amazon or anything, they've been using AI and smart stuff in the back end. It's just the conversational piece. And I would also argue, Craig, I'm curious to your thought. I'm an old school market data guy, where users want everything on a screen. They want to click on things. They want to go through things. They don't want to type a big long string of show me all of the news on my portfolio, and here's all of the companies and so forth. But at the same time, the conversational interface, which we actually have in our products, is also compelling because it allows somebody who's pretty simple and naive to go in and start to interact and hopefully gain some really good insights or intelligence that can help them do their job better in the wealth space.
Yeah, the way I see it is that AI is going to be incorporated into basically every application that advisors touch. So
Absolutely.
and everyone is doing it. All the clients we work with, like half of our clients are broker dealers, RIAs, asset managers. The other half are the software vendors themselves. And they're all asking us, how can we use AI better? How can we put it into our tools? And so sometimes it makes no sense, but everyone feels they need to do it. So everyone's got, with the CRM, financial planning, these advice engagement tools, reporting tools, portfolio management tools, everyone's looking for ways to shove an AI into their application. Some cases it's very useful. Some cases maybe it's dubious, but things like reviewing which clients should I talk to next and why? What should I say to them? What information do you know about them? We looked at an interesting company. I won't mention the name here, but that is gathering data on advisors at a very low level for asset managers to say, even to the level of, this advisor likes to go to this restaurant. You should book a lunch there because that's their favorite restaurant. First of all, it's a little creepy, but that kind of data, if is highly targeted and will greatly increase the feeling of personalization when you're getting
The
contacted
rapport.
by someone.
Absolutely. Look, if I knew, Craig, where you went to college, what you like, what foods you like, what you trade in, how old you are, your demographics in your family and so forth, I can be a lot more targeted as a financial advisor, as a wealth manager. And trust me, clients care. They feel like you listen, you understand me. And if you can then deliver back, I mean, to your point, as you're a financial advisor, depending on, or a wealth manager, and your clients are asking for advice about what funds to go into or what asset management products to consider based on certain criteria, how do you find that now? How do you go through prospectuses and equity funds and mutual funds and index funds and asset managed funds and all of this stuff in terms of yield, return, risk? Are you going to sift through 500 prospectuses to try to do it? No, there's obviously now much different ways that financial advisors, instead of spending time going through that, they can interact with clients better. And that's where the winners in this space will be. It's those that can really understand and anticipate and then interact with their clients faster than their competitors. Because I'm only going to do business with a JP Morgan or a UBS or a Citi, probably for most of my wealth or assets.
Yeah. And what I think what we're seeing more of is these tools that are helping advisors and nudging them in the right direction. Some of the tools I've seen are around the pipeline management, where they're taking the advisor's pipeline and then using natural language processing, using these types of tools that gather data from multiple sources like yours is doing, but then feeding it into a score for financial complexity that says, we believe these prospects have the highest financial complexity, meaning assets, investments, real estate, whatever, and that these are the ones you should talk to first because they're most likely to be interested in your pitch as a financial advisor than these other ones. So those types of things, which are saving advisors a tremendous amount of time in the areas that they need to because their time is limited, I think are the most valuable.
Well, it's sort of like the next best action thinking. And the other thing we see a lot of now, and this is true for every financial advisory firm or broker dealer, RIAs, you almost certainly have a product, a portal, a place for your clients to go to look at their accounts, to trade and so forth. But increasingly people don't go. They're overwhelmed, too many websites, too many applications, too many, login credentials I have to remember. And so with several of our clients, we use data filtered on things that are relevant and AI to summarize it. And then we use automated delivery through basically intelligent newsletters and intelligent briefings. And what happens is, as a firm like maybe a JP Morgan or an S&P Global has found, it gets very high user engagement. If you're getting in your email every day from a major firm you do business with, so it's trusted and it's credible, and it's talking about what's happening with your portfolio, what's going on in the market, and it's short, it's sweet, it's summarized, and you can click into the underlying articles. Why is that important? Because it drives people back to your portal. Many of our clients contribute their own research or content, like an S&P, and when the user clicks on the link, it re-engages them. So it not only tickles the customer, as I like to say, every day or week with something that's relevant and targeted, which many of our clients have 80% daily open rates. Craig, unheard of. I don't know what your email open rates are, but our firms are normally not that high. But with this sort of targeted information, because I think people are craving for, give me a simple idea of what's going on. I don't have time to sift through all these different things, but if I'm interested, I want to come back to the Citi portal or the JP Morgan portal or the S&P Capital IQ platform to get more and to do more. So I think that's also where this comes into play, is Gen AI can start to magnify the impact of a financial advisor and wealth managers in ways they couldn't do today, even with an army of people.
Well, that's impressive. Our burn rates are pretty good, Jim, about 35% for at Ezra Group, but 80% is unbelievable. But you're jumping ahead, and we're running out of time as well. But JP Morgan. So let's kind of squeeze in two more use cases. What is FinTech Studios market intelligence? How is JP Morgan using the platform?
Over the years, and most of our clients have been clients for years, over the years, JP Morgan has used this in the legal and regulatory area to really help them on their regulatory compliance. It's used it in their internal private investments group to monitor and track all of their private portfolios. But the most recent and the fastest growing area is we've integrated our platform and data with other data that they asked us to integrate and to deliver it in a platform that they deploy to their internal capital advisory users within the firm, as well as to all of their hedge fund clients. So it's become a major part of the way they reach their hedge fund clients with updates on what's going on in the hedge fund markets and what's affecting them or their peers. And it drives, again, enormous open rates and credibility, which is in a digital age what you need, right? You could build a great site. It's like that old movie, if you build it, they will come. Well, the fact is they won't, not today. So you have to have a way to engage them regularly in a way and in a format they want, right? Maybe it's email, maybe it's somebody else. I want to dive into an app or look at a dashboard. So that's what goes on with firms like JP Morgan. And we have many other clients that do a similar thing, including firms that go outside of the wealth management area. But I think this is something all firms need to do, is how do they reach their clients or targets in a way that those clients want to be engaged. And you'll know it by the open rates. You'll know it by the engagement level. And I also think it will drive clients to call back to their advisor and say, hey, Bob, or hey, Craig, I just got this email from you. It's killer. Let's talk. I really want to rebalance my portfolio. I think I need to move into bonds, or I think that other fund you were talking about might make more sense. And by the way, let's go out and play a round of golf. Wouldn't that be a nice call from your client?
So if I could paraphrase, what we're doing at JP Morgan is for hedge fund clients, analyzing and keeping track of all the assets that they've got and what news is related to those assets, and then feeding it into a newsletter back to the clients. Say, here's what's happening with your investments.
Less specific to their holdings. No, it's more specific to the hedge fund market and what's happening in the overall capital markets that hedge fund managers, hedge fund investors, hedge fund participants care about and need to keep track of, because obviously big capital markets firms like a JP Morgan or a Goldman or any of these firms have big trading desks, and they trade very actively with these hedge fund clients, as do firms in the wealth tech space.
So are there any specific actions that the hedge fund clients can take that data goes back into your system?
So not in the way we've deployed it in that particular example, although the platform that we're embedded in, because all of our tools can also be embedded in client applications or websites and so forth, that has a number of other workflows and a number of other reports and a number of other analytics, but it's not the piece that we focus on.
I wanted to quickly touch on a piece of cool tech you showed me in the demo. So you showed this great, like not a word cloud, but what was the cloud where I was clicking at JP Morgan and held the circles that were linked that showed the linkages in the news stories. So if today's news, Charles Schwab was in the middle because they just had a big announcement, and then it was branching out into all of the other named companies that had stories where they were also mentioned with Schwab. So what do you call that?
What you saw was what we call a knowledge graph.
Knowledge graph. Thank you.
Yep. And it really takes all of the structured data, which we've converted from unstructured data that we ingest, and it allows you to look at relationships that you would have never as a human across millions of sources and languages ever seen about competitors and suppliers and partners and even board members and others that are being mentioned. And again, it's an example of what you can do with great data, but also the technology today to visualize it and analyze it. We do something called predictive analytics, where we look at 11 million companies, people, topics, and so forth in real time. And when we see anomalies, I think I showed you, Craig, a few examples. It's an event, and when the stock's going up or down, or there's a big spike in the mentions of Boeing or of Schwab, there's a reason. It's sort of like where there's smoke, there's fire. And so because we have multiple sources in multiple languages, we often surface events nobody else will pick up, not even Reuters or Dow Jones or Bloomberg. They don't have enough writers and reporters to cover every beat, to cover every story in every language. So it's phenomenally exciting. It's sort of, I often call it Multex 2.0.
For those who know what Multex is, right?
Yeah, exactly. Well, we started there earlier. We mentioned it a little earlier, but yeah, that was 25 years ago. And
yeah, man.
Then it was great tech. But today with the compute power, the massive data sets, the cost advantages, these language models, and when you combine structured data structures with these language models in the right way, and we do it even with client documents. We have several clients that deliver their own documents, like an S&P, so we might as well just shift onto that one. So we deliver this sort of market intelligence to them through their Capital IQ Pro platform. It's gotten a lot of great traction. We've launched a series of digital IQ editions. They're daily editions in the US, EMEA, and APAC that are filtered on major companies in each of those markets and major market moving events. And for them, again, it gets extremely high open rates. Again, I mentioned over 80%. And it's a great way to drive people back to the platform. They also contribute their own internal documents like research and transcripts and others, which we can both summarize but link back. So a key part of this is get it in front of a customer in app or in their email or in whatever vehicle, and give them good information that establishes brand and trust. And this is true in wealth tech as well as with an information provider, and then drive them back to your value proposition, which in their case is their platform, but to a wealth tech person, it might be to their advisor or RIA.
Jim, you have covered it all. I mean, there was so much more I wanted to talk to you about, but we're running out of time. I got to end this at some point. But the information you shared was tremendous. Really appreciate you sharing with our audience. Where can people who are interested in your company find more information about FinTech Studios?
They can certainly go to our website, www.fintechstudios.com. And if they're interested, they can also sign up for a free trial of some of our products.
Awesome. You heard it here, folks. Go get your free trial of FinTech Studios. Jim, I got to have you back on so we can talk some more about this and get a little bit more, some of the things we wanted to cover around generative AI and some of the trends you're seeing in the market. But we'll do that at a later date. Thanks so much for being here.
Craig, it's really my pleasure. Thanks for having me.